Gold has gone past the $4,000 an ounce mark for the first time. This means that one needs to spend more than 3,55,000 Indian rupees to buy approximately 31 grams of 24-karat gold. So why are gold prices skyrocketing? Why is gold more expensive than ever before? What does the future hold? And will gold be affordable ever again for the common man? Let's connect the dots. Buying gold is beyond the reach of the common man today. Just look how much the price of gold has risen.
So the gold market has absolutely been on a tear this year so far. In September alone, we've seen gains of something like 12%, and overall, gold bullion has racked up around 50% so far this year.
Well, the price of gold has risen dramatically in recent years. It has doubled in the last 5 years. In 2020, it was around 55 euros, about 63 US dollars per gram. And now it is at 110 euros, about 127 US dollars as of today.
A 52% rise in the value of gold this year alone. That's a staggering increase. So what's driving this gold rally? Gold prices are skyrocketing mainly because investors are looking for a safe place to put their money in because of mounting economic and geopolitical uncertainty.
I think an awful lot of what we're seeing is about fear right now. If you think about gold as a mirror onto the rest of the world, you could really describe it as being the sum of all fears, whether they be geopolitical or economic.
In the United States, for instance, there is economic instability, government shutdown, and slowing growth. When US GDP growth slows or outlook darkens due to weak consumer spending, higher tariffs, or policy uncertainty, investment demand for gold increases. So periods of economic instability tend to attract investors to gold, which is widely considered a safe haven asset. High inflation and the expectation of interest rate cuts by the Federal Reserve are also major forces driving gold prices to record highs. Gold is widely viewed as a hedge against inflation because its value tends to rise as the purchasing power of fiat currencies like US dollar, Indian rupee, euro, and yen declines. As far as interest rates cuts are concerned, when interest rates fall, returns from assets like bonds and savings accounts decrease. This makes gold more attractive to investors, pushing its price higher. What's more, government shutdowns delay essential economic data releases. They signal political dysfunction. This too is prompting investors to hedge risk by buying gold.
The government shutdown is really a symptom of the fiscal problems that have been happening in the United States and around the world. These debts are unsustainable, and we need to either raise taxes or cut spending in order to reduce them if we're not going to do a currency devaluation.
Then the US dollar is weakening. In 2025, the US dollar index has fallen nearly 10%. That and persistent fiscal deficits have led investors to question the dollar's reliability as a reserve currency. This has prompted a flight away from the dollar and towards alternative assets like gold. This is further fueling the gold rally.
Gold is going up right now for a number of reasons. Most recently, significantly, it is a combination of interest rates, tariffs, and a general erosion of the US dollar, which has lost at least 10 to 12% of its value against the other currencies globally in the last 6 to 9 months.
Central banks worldwide have been rapidly accumulating gold. More than 1,000 metric tons of gold has been purchased for a third consecutive year. This has pushed official gold reserves past 36,000 metric tons globally. This is strategic gold buying. It reflects a deliberate move to diversify away from US treasuries. It is a result of shaken confidence in the dollar's long-term stability and concerns about mounting US national debt. As of early October 2025, the total gross national debt of the United States stands at approximately $37.85 trillion. This is an increase of about $2.2 trillion compared to the previous year. Can you imagine that this debt is rising at an average pace of roughly $69,000 per second, or around $6 billion daily? Gold buying by central banks too is pushing the price of gold to a record high. According to the World Gold Council, more central banks plan to add to their gold reserves within a year, despite high prices for the metal. In India and elsewhere, small-scale goldsmiths are feeling the heat of record gold prices.
As the price of gold has increased, the sales have drastically declined. No one buys ornaments and there are very few customers. Only those who desperately need to buy come to buy gold, and they buy in very small quantity. So the orders for gold jewelry have significantly reduced for small showrooms. The big showrooms get the jewelry from wholesale workshops from elsewhere, as there are relatively more sales. So the situation of the small artisans is very grave.
So what about the future price trajectory of gold? Gold prices are expected to keep rising in the coming years. Forecasts suggest gold could reach about $4,200 to $4,400 per ounce by 2026-2027. By 2030, the price might peak around $5,000 or $5,455 per ounce for the same reasons: ongoing economic uncertainty, inflation fears, and geopolitical tensions.
I think 4,000 is an important number for gold to get through and trade above it. I think it's happening right now in front of us and today. And with that happening, I think that's just going to move the bar further ahead, that we could be starting to think about gold at 4,200, 4,300, and 4,500 in the coming 6 months.
But if you look at what some of the major investment banks are saying, we do expect, from their perspective, that prices will continue to rally. They see prices extending the gains out into 2026, and I think we do have a top forecast of about $4,900 by the end of December next year.
Analysts and financial institutions predict steady growth with some ups and downs along the way, but overall expect higher prices. So to sum it up, gold is expected to remain valuable, and it is likely to become more expensive in the near to medium term as global uncertainty and economic challenges persist. That's all in this edition of Connecting the Dots. We'll see you next week with more raging issues. Until then, it's a goodbye from all of us in the Delhi newsroom. This is Munmun Bhattacharya signing off. Take care and stay safe.